Money Manager. In the studio with me is the CEO of Oasis, and that is Adam Ebrahim. We're going to talk about the Oasis Crescent Equity Fund. Ethical, that's what we said before, that's what you said to me before we came on air. What does that mean?
Making sure you invest in a way that, in companies that are friendly to society, friendly to nature, and actually very constructive in the way they treat their customers, their environment, and their suppliers. Yeah. And net, if you get the right mix of companies with the right behavior in the right activity, by definition, you should have a pretty low risk portfolio.
Out of every 100 companies listed on the JSE, in your opinion, how many are, in your view, ethical?
Most probably about half. And things like exploiting your customer with these ridiculous interest rates and selling to people who cannot afford and then doing garnishy orders, we believe that's totally unethical.
So a micro-lender would not be in your portfolio?
No.
No. Even ones that have changed over the years, I mean, can they transform themselves?
So yes, companies can transform themselves, but if you look at the nature of this portfolio, those interests earning companies like micro-lenders and banks wouldn't be part of the portfolio.
Okay, now let's have a look at the history of the fund first of all. How long has it been in operation and how long have you been involved with it? Obviously since inception.
Yes, conceptualized it and we launched it on the 1st of August 1998, so it's 17 years old. It's been a marvelous fund because it's had a long-term focus. It's really added a tremendous amount of value, and we've built a fantastic client base and investor base. And so what we have is goal congruence on time between the manager's view, which is a long-term view, and the investor's view, which is long-term, which has made it fantastic to add value for our clients. And if you look at the long-term track record, just under 23% per annum returns.
Since 1998?
1998. And that is despite, you know, we spoke earlier on about the choppy seas.
Goodness me, I was going to say to you, there's been a lot of events between then and now in that 17-year period, and we're in another period now, but more of that later on. How do you perform in bull markets and how do you perform in short-term bear markets? Because the bears have been quite short over that period.
Sure. So our style is, as value managers, as ethical managers, we tend to be very conservative in the quality of companies we choose, the quality of management we choose. We like market leadership with high barriers to entry and low barriers to exit, with great asset allocators, capital allocators. So what does that mean? The fund has tended to have roughly 45% of the downside correlation without the use of derivatives or leverage or anything like that, pure stock picking. So the fund has a downside correlation when the markets are down on average over a very long period of time of about 1.7, negative 1.7, compared to the all shares index of negative 3.7, so less than half the downside volatility.
So you don't use futures or options in order to protect yourself. Are you allowed to, though, should you need to?
No, we're not allowed to. It's outside our mandate. We clearly focus on stock picking and making sure we choose the best companies that turn into the greatest investments. There are great companies that turn into lousy investments because of the price. We've got to choose these great companies at very cheap prices to make them fantastic investments. And that's really part of the fun and enjoyment of managing this fund.
I haven't heard anyone say fun on this show before. That's an encouraging sign and very refreshing as well. Does it crimp your upside, though, when the markets are in a bull phase?
In theory, no. And I'll explain. We've had a beta, the correlation to the market of 0.9.
Yes.
So if the market goes up 1, we'd go up 0.9. Market goes down 0.1, we'd go down 0.9. But we've had an alpha over this full period between 8 and 10%.
Yes.
So we've actually had virtually a 90-95% upside correlation and only 45% downside correlation. So for the downside protection, you haven't given up a lot of the upside. So over time, the fund's actually done fantastically.
Let's talk about asset allocation now, if we can, Adam. I mean, how has it changed over time? Would you keep it more or less constant?
I think we're a bottom-up house. We look at companies and identify instruments and then build a portfolio that way. At the moment, you know, everybody is kind of very bearish on the Rand at 13 Rand, 15, 14. There was nobody bearish on the Rand when the rand was ridiculously overvalued at 6 and 7
Yes.
to the dollar. Now that's when we took our money offshore, and you know, we took a lot of money offshore, took right up to the maximum allowed by the prudential requirements. Not only did we get the rand right at between 6 and 7, and we wouldn't take out at 13 and 14.
Will you bring back at 13 and 14?
Yes, we would. If we, you know, it depends.
Yes.
You know, you have to weigh up the quality of your the investment opportunity. And not only did we take the rand out at 6 and 7, we bought the global markets, especially the developed world markets, right at the bottom.
Well, when you started in 98, of course, it was just after an emerging market crisis, a Russian default and the Thai baht, etc. So the markets were under a bit of pressure, weren't they?
Exactly. So, you know, then you had the tech bubble, then you had 9/11, then you had 2008, you know, you name it, and now you've got the second emerging market crisis. That downside is good for us.
Yes.
Because we're able to exercise our skills and the art of investing rather than following the herd and following the wave. So this is the time we really, really add value. We buy great companies, and we take a prudent long-term view. So when everybody else panics, that's when, you know, you continue and identify the best companies in the world, and you buy them cheaply.
Yes, so you forget all the noise that's going on television, etc., and you just say the company's not going to change because of this. It's going to still be in existence in 10 years' time when our fund will still be in existence. Okay, asset allocation now. Are you up to the limit of your overseas allocation?
Yes, and will remain there. And the reason being, even though the rand is much weaker, and by definition, if the rand weakens, because you're at your limit, you actually have to bring some money back.
Yes. So you must be about 27% or something at the moment.
Yes, you know, and so you'll bring, at the right time, you'll bring money back, but you'll remain at the limit. In an ideal world, we believe that a typical South African investor, to balance risk and reward, should have up to 60% of the assets offshore.
Yes.
And so we're at 27, we allowed 25, and you know, the balance of 15 you can get elsewhere. There are some fantastic companies, global companies listed on the JSE,
right,
like Richemont, like Renet, who don't have any assets in South Africa, but they're fantastic global players, and we have a big exposure to them. But the real opportunity for us is those companies that benefit from the weak rand. They're shallow mining companies or manufacturing companies who are well positioned with great management, with a sustained competitive advantage, who can really make a lot of money exporting at the rand at 30.
Are you starting to see that kicking into the companies? You haven't mentioned names, but I suppose something like Pallinghurst would be a company, because I know you've been keen on that in the past, and it's a big component of your portfolio. Have you started to see the rand effect kicking in yet?
If you just look at the balance of trade, you're starting to see the trade account move into surplus, and that's a combination of a couple of things. Our companies exporting more of our companies, less of our companies importing, so import replacement. That's something that you've got to bear in mind. And it's just starting. We would have anticipated it would have started two and a half years ago, but it started 2.5 years later. But that's the beginning of a trend. And then many companies in Europe in particular are onshoring to South Africa a lot of service-related activities. So there's many companies employing. We interviewed a computer company in London, and they had nearly 2,000 employees in Cape Town. And so the weak rand, you know, makes us very competitive, not only from exporting raw commodities, but employing and exporting services, and the tourist industry that we should expect a real bumper tourist industry in Cape Town.
Yeah, I really think so. I don't know what a particular tourism company you could single out. Maybe it's City Lodge, maybe it's Sun International, I don't know. I'm sure the Table Bay is going to be full. People might be going off to Grand West. But let's talk about two of your big holdings. We've mentioned Pallinghurst. Let's talk about RCL Foods. Their results came out last week. This has been a big turnaround from Miles Daly and the team.
Yes, we were expecting it for a long time. They've been building what we believe is the next big thing,
yes,
in the food industry. So when those tourists come to Cape Town, they eat, and a big component of that is the fast food. And so RCL is really a play on the fast food industry in Africa and South Africa. the Kentuckys, the Nando's, amongst others, the Burger Kings. And what RCL's put together to provide a solution, not only providing more product into the basket that goes to these fast food outlets, following them into Africa, but through vector. If you want to distribute to Spur or any of these companies, by and large it will be an RCL vehicle with RCL logistics taking. So not only do they have the
logistics, yes.
So, and this is the management team that built Unilever Africa. So you were buying this fantastic management team with a great vision, supported by one of the best strategic shareholders South Africa has, the Rembrandt Group.
Is it going to do something like a Steinhoff did, suddenly have a leg up when people realise that this is a company to be reckoned with?
Exactly. Not Steinhoff. I'm going to use exactly what Nationale Pers did. When we bought Nationale Pers and nobody liked it at R1.41,
yes.
Now everybody loves it close on to 2,000. We bought Assor at the equivalent of R2.80, and everybody loved it when it got into the all-share index, the ALSI 40 index.
Yeah.
We think this is something, it's under-owned, it's got the making of a fantastic company. Now, what have they done? They've actually added a big grocery division, and some very, very strong brands. And we believe that, as they build their track record of performance, as everything comes together, we've had 2 very, very good reporting periods. And as we go into the 3rd and 4th great reporting period, people would like to start buying the shares. And there are only 2 players with shares, Remgro and ourselves.
Let's talk about the markets themselves and how you are playing it. I mean, have you been, for example, and again very briefly, buying in the recent dip which started at the beginning of August? In fact, the markets peaked in May, I think it was.
Yes, I think we raised our cash. We have a low exposure to emerging markets. We think the market will have a bit of a tougher time for the next quarter, maybe going through to the end of the year. In that, we're creating great opportunities to buy, and we believe that we'll be buying great companies both domestically and globally. So we're buying some fantastic global companies, property companies on 15, 16, 17% free cash flow yields. We're buying some telecommunication companies on 11, 12% free cash flow yields with 6% dividend yields. We just think they're fantastic. And in South Africa, we have identified 1 or 2 companies that are now coming into range, and we'll be picking up more. And obviously, where RCL and Pallinghurst is at these levels, we're just buying more.
We could have gone on for ages, but we'll have to stop it now. Thanks very much for your time this evening. It's Ebrahim, who's the CEO of Oasis. So we've been talking about the Oasis Crescent Equity Fund. That's it for Money Manager.